Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. I hope you had a peaceful and restful long weekend.
Definitely more peaceful than last week, for sure.
We definitely needed that. All right. Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 36,000 and change. Bitcoin is down 2% over the past 24 hours. And the CoinDesk Ether ETX index right now at 2545. ETH is up slightly, about 0.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So Lawrence, not much movement going on with Bitcoin. Some talk about going even lower from JP Morgan. What are your thoughts?
Yeah, so basically, one thing to point out is that there actually was an 8% move on the upside last night over a 24-hour period, but that's still not enough. Look, we're seeing a lot of negative action in the options market, more put buying, as Kargad has been pointing out today on our site on CoinDesk. So you have a more of a bias towards the downside. From options, we're seeing it's below the 200-day moving average of about 41,000 and change. That's really, really not good. So overall, we basically are, there's a lot of softness right now.
Mm-hmm. All right, bumpy road ahead. Emily, at the same time, the ex-head of China's digital yuan effort says CBDCs, central bank digital currencies, could operate on Ethereum, potentially giving Ethereum a long-term boost.
Yeah, that was pretty surprising to me. We'll see if that actually happens. In China, things generally aren't said that casually or accidentally. Obviously, he's not running this anymore. But yeah, what's interesting about this is that China's central bank digital currency is kind of the opposite of a decentralized cryptocurrency. It's very much, directed by the People's Bank of China. So, his indication that eventually CBDCs could become more smart and run on decentralized blockchains like Ethereum is really fascinating. We'll see if that actually happens.
Meanwhile, the U.S. Securities and Exchange Commission is suing 5 people for their alleged involvement in a Ponzi scheme at Bitconnect, a crypto lending and exchange platform that collapsed in 2018. According to the SEC's complaint, Bitconnect used a network of promoters to offer and sell over $2 billion in securities without registering the offering with the SEC and without being registered as broker-dealers as required by federal securities laws. Joining us now to discuss is defense attorney and former SEC Enforcement Branch Chief Lisa Braganca. Welcome, Lisa.
Thank you.
So, Lisa, this news broke just before the weekend, and I'd love to get your initial thoughts. And what did Bitconnect do that was more egregious than other ICOs, initial coin offerings out there at the time?
Well, Bitconnect did, I think, pretty typically what a lot of the others were doing at the time. This was 2017, was right after the Dow report came out. The SEC had just kind of put the word out, hey, watch out. These coins fit the definition of a security under the Howey test. So I think the timing was really important. What was interesting here was that there's so many interesting things about this particular case, but the whole thing came down. Bitconnect just kind of ended because of state regulators. Texas and North Carolina brought cease and desist actions, and it didn't even take the federal government doing anything. That was Bitconnect just took everything down. So then we've had this period of time, a class action was brought fairly soon, and that alleged fraud. And what another interesting thing that I find in this SEC complaint is that there is no allegation of fraud. This is purely you failed to register your coin as a security with us. You failed to register your the salespeople as broker dealers, And then there's some aiding and abetting. You aided and abetted.
Is it fair to call it a Ponzi scheme then?
It is. I would say this is one that I wouldn't necessarily call a Ponzi scheme. There's a lot of overlap between a Ponzi scheme and a pyramid scheme, but this really was built like a pyramid scheme. This is a type of case that you see much more often from the Federal Trade Commission, where you've got, the words in it. As I was reading it, I just was, it was hearkening back to FTC cases where, you've got all these downlines and you have, the pyramids in terms of compensation for bringing people in. And, if I bring somebody in who then brings somebody in, who then brings somebody in, I get a piece of those, of the profits that are coming in from all those people in my downlines. Typically, we don't see downlines that often in SEC cases. But again, this is all of these sort of, I read the complaint and I read something that, sings fraud, and yet there's no fraud allegations here. So I found that interesting, that I think we have a new administration, we have a new chairman, and it's hard to know with a case like this because surely they've been working on this for a long time before the new chairman showed up. And it's very hard to know the particular facts here. I mean, clearly they cannot go after the main bad guy. He is in India, and he was arrested in Gujarat. So, things are happening. There are criminal investigations going on, and arrests being made in Australia and India, and who knows where else.
So there's a sense that this is a globally coordinated investigation and legal investigation.
I think so. I would imagine that, there is more coordination going on in this one than there has been in the past. And I think it's also interesting, just to get the word out, the FBI is still not recruiting, but certainly reaching out to find people who lost money in this case. So, the frustrating thing is I get lots of calls from people who have lost money in these types of things, and there's not really much that the FBI or that the SEC or, folks can do for them. But it is a help in the future. You might, if you did lose money, you might want to contact the FBI so that you can help them to keep this from happening in the future.
Is the issue that they didn't, is at least one of the issues that they didn't put some sort of hurdle to keep U.S. citizens from paying into the scheme? What are the technicalities involved here with that? I mean, can any if they put up something saying U.S. citizens can't do it and U.S. citizens found an easy way around that, would they still find themselves in this kind of hot water that they do now?
That's a great question, Lawrence, and people are wrestling with that so much because you can set up a virtual private network, and how would the coin offerer know? You're completely hidden. You can lie. But given the timing for this case, I don't think that really comes up because this happened in 2017 when it was kind of a free-for-all in the U.S. But the other thing is these folks who are charged live in the U.S. So the SEC isn't trying. The SEC could bring a case based on just, let's say, I, Lisa, decide to offer a coin and I'm not going to register it and I am going to just out and out make it a fraud. Hopefully this will not be cited, in some criminal case against me. This is a hypothetical. But I decide I will sell it 100% to people outside of the country and not in the U.S. at all. I still would be potentially violating U.S. law. And,
Lisa, Sorry to interrupt you. Yeah, so you mentioned, obviously this has been in the works for a while. This isn't a new case, but I think everybody's really, trying to read what this means and what this means going forward. And now we have like a new SEC chair in. And I'm just curious, like, what is your sense of what this new era is going to look like? Are we going to see more enforcement, stricter enforcement, clearer enforcement? Just if you had to sort of give a sense of where the SEC is going to be going in this new term.
I think we're going to see clearer enforcement. I mean, we are already seeing the change in the administration. I won't get into a whole lot of it, but I've been very involved in, expungement rulings and this whole esoteric area where people get complaints removed from their broker-dealer public record. And there's been a big change at the SEC in how they are responding to that type of information. So there's definitely a new sheriff in town. Everybody who comes in at that kind of top level makes a decision about, how much they want to upset the apple cart. And I remember when Harvey Pitt came in, we all were thrown on our butts. He had a very, very, very different style than previous chairman. You got to adjust. You got to get ready for it. But I don't think that Gensler is anywhere near like a Harvey Pitt, but he's hard charging. He's smart, and he's willing to halt things and say, wait a minute, I need to understand this. I need to know that this is the right thing to do. He's not just going to let things go on just because, it's the continuation of, something that has been in the works for 2 years.
Mm-hmm.
You mentioned that how in this how in the Bitconnect case, like you had the important role of these individual states, right? And that's one of the really interesting things about America is that you have like these individual states, a sort of patchwork of different regulations. And Gary Gensler has implied that he wants more of like a federal framework, kind of something a little bit more consolidated. Do you think that's going to happen?
I think it's going to happen, and I think that many of the states will support it. I think states are overwhelmed. I mean, they just don't have the resources. The vast majority of them. There are a tiny, tiny few states that have the resources to be able to really regulate. But the vast majority of them do not. And that's just the reality. And it's so much more efficient to do it through a federal lens. So, I think there will not be much pushback on that. And my hope of hopes is, maybe he will move that into other areas, just like, he was a trailblazer and, took care of swaps regulation. And granted, it's not done. He gets faulted for that. But, swaps was like a global mess, that he was sorting through. So I give him a lot of credit for that. But, boy, if he can get into, also regulating insurance and, just the things that sort of are existing out in the along the periphery, then, he's going to be very interested. I still love that he taught a class on blockchain and cryptocurrencies. And, so you can go online and you can see all the things that, or not all, but a lot of the things that he thinks and says about Bitcoin and blockchain and where this whole process is going.
Lisa, it'll be interesting to see how this develops with Bitconnect. Thank you for weighing in this morning.
Thank you.
Right, that was defense attorney and former SEC branch chief Lisa Braganca. Coming up, a U.S. congressman proposes protections for investors with forked crypto assets. And checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So the White House published its fiscal year 22 budget proposal, which includes 2 crypto reporting requirements. You tweeted that there was this big news dump just before the holiday weekend. I wonder about the timing, and maybe you can go into what those crypto reporting requirements are.
Yeah, so we finally have a sense of what President Joe Biden wants out of crypto. There were 2 Treasury Department provisions. One basically wants to ensure that no one's trying to evade taxes by stashing their cryptos offshore. And the provision basically creates a kind of reporting requirement for brokers that are holding cryptos in foreign entities that the U.S. has, agreements with in terms of supervision. The other provision is just kind of a more general financial institution reporting framework structure. I don't have a lot of details on that. The Treasury Department did publish a kind of, they call it a green book, but basically a PDF saying like, here's what all this stuff means. And that one, again, is just kind of, just making sure that the various institutions that touch or hold crypto are reporting their numbers accurately.
Nick, when we looked at the budget over the weekend or last week, there was that one line item. Are they expecting some sort of revenue to come from all this? I mean, is that, it seemed to all be zeroed out. What exactly, have we ever figured out what that line item was?
Yeah, so it was a little odd because the line item that we're talking about, it's the amount of budget increase or decrease from previous years. So this is a new item, and there were no numbers attached to it. But if I'm reading it correctly, my understanding is that, the idea is they're going to make sure that no one's trying to evade taxes. It's unclear how much they're, putting towards this. Maybe they're folding it into existing authorities, and so it doesn't need an independent increase of its own. But, the target in the end is, just making sure that, and, regulated entities that fall under the Treasury Department's purview are, being truthful about how much crypto they're holding and how much crypto they're holding, in particular offshore.
Hey, Nick. So with this Bitconnect case, is there anything really significant here, or is this just kind of like to be expected? Like this is a very famous, scheme, and is there anything here that's notable?
To me, I think the interesting part, and this was actually also pointed out by our colleague David Morris, but the fact that the SEC is going after 5 promoters of Bitconnect versus any individuals who were part of either the executive team or the founders of a project, that I think is kind of made the most interesting part right now. And as you said, this is not an unexpected suit. I think people were the big question is like, why did it take so long? But at some point, everyone kind of expected Bitconnect to appear in an SEC, enforcement action, especially after it collapsed. It was almost 3 years ago, I think, or more than 3 years ago. But I think if I'm looking at this and trying to read the tea leaves, my question is, is this the SEC saying to promoters generally, not just celebrities, but general promoters of, crypto projects, be careful lest this be a scam? And then B, is there a next step here where they're going to go after, an executive or founder or someone who had, actual authority over the project?
Yeah, but it's all done retroactively, which is the scary part. Nobody really knows. And the Bitconnect guy, right. Bitconnect, didn't get any, it wasn't mentioned in this suit.
Yeah, he wasn't named.
Which, that's interesting. Thank you very much, Nick, for the update.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
One of Congress's biggest advocates for the crypto industry is reintroducing legislation this month that offers protections for investors with forked crypto assets. That is, when blockchains split in 2 and give investors 2 cryptocurrencies. U.S. Representative Tom Emmer's proposed legislation outlaws penalizing taxpayers until the IRS clarifies its policies. Joining us now is Congressman Tom Emmer in Minnesota. Welcome, Representative Emmer.
Good morning.
Thanks
for having me.
Great to have you. So you're a top Republican on the House Financial Services Committee's task force on financial technology, and you say that the IRS has unfairly punished those investing in an emerging technology, and what has been issued by the IRS so far is not pragmatic. Can you go and explain what you mean by this?
It's uncertainty. The worst thing that government can do to the marketplace is create uncertainty. And certainly when we're talking about crypto, when we're talking about this whole industry, because now it's a $2 trillion industry, the uncertainty can be pretty, frustrating. It can stop the innovation. So you referenced it. We reintroduced the Safe Harbor for Taxpayers with Forked Assets Act on tax day, May 17, 2021. And what this does, it's going to prohibit penalties against taxpayers who are attempting to report gains or losses on their forked digital assets until the IRS finally issues sufficient guidance on how to do so. The difference between this 117th Congress text, because we introduced this in the last Congress, it delineates that receipt of a forked virtual currency may not constitute a taxable event. And Christine, that's the problem. You know, forks are splits in one distributed ledger, often a blockchain, that results in a new second independent digital ledger. For example, Bitcoin Cash is a fork of Bitcoin. This bill that we've reintroduced with the new language is a way to, I think, reasonably insulate taxpayers from potential liabilities that they didn't cause. They stem primarily from the present lack of sufficient guidance from the IRS on forked virtual currencies. And I think to emphasize this, people have to keep in mind that Dogecoin was forked from Lucky Coin, which is a fork of Litecoin, which is a fork of Bitcoin. What happens here, Christine, is that you or I hold some asset. You have a fork in this digital asset. We may not even know that it forked. We may not even know that we had Lucky Coin and now we have Dogecoin, and yet the IRS, because it's not been clear, puts you and I in a quandary where we might get up one day and suddenly be sent a bill from the U.S. government, specifically from the IRS, telling us that this transaction that we had nothing to do with, that we didn't control, somehow is an income event, which that's what we're trying to protect so that the innovation can continue.
Representative Emmer, it's actually just interesting to hear you talk in such detail about, Dogecoin is a fork of Lucky Coin. You don't hear this a lot from Washington. I'm just curious, how did you get so into crypto? How did you learn so much about crypto? And are you very unusual in Washington? Because my impression is that you are in terms of a level of understanding. So what drew you to cryptocurrency in the first place?
Well, this is my fourth term in the U.S. House of Representatives. I represent a district in Minnesota. And when I went to Washington, D.C., Emily, I looked at it as Main Street issues. It's about capital formation. The thing that separates the United States of America from every other country on the face of the planet, and quite frankly, in my opinion, it's what defines our quote-unquote freedom, is our financial system. The ability for anyone with a great idea to go sit down with their local community banker, whomever it is that they work with in the financial industry, to try and get that startup capital to start that next small business, that starts in a garage, like Harley Davidson, like Amazon, like Walt Disney, where they get some startup cash. They begin it in their garage, if you will, and it grows into the next big business. And as I got to Washington, the way I got involved in crypto is a great staff guy who's totally into it gave me the book Age of Cryptocurrency. And what they found out.
By Michael Casey, that's the chief content officer at CoinDesk. Shout out to
Michael Casey.
Thank you for doing that. I met Michael, and I told him this is what started it for me. I read the book because I read everything they give to me, and I realized that for somebody that looks like me, this is not exactly in my wheelhouse. So it was about getting up to speed, figuring out that this is not Silk Road. This is what traditionally some of my colleagues who don't understand the internet, who don't understand where we're moving with these different technologies. In fact, because they don't have the experience with it, they fear it. On the other hand, I'm different. I embraced it. I got 7 kids, and they're ages 30 down to 19. They're right in the middle of this. And I think it behooves people like me with election certificates, Emily, to get up to speed, to understand the promise that this provides, and really to try and advocate that it be done right and that we allow this to grow and have the next level of innovation that, frankly, is going to give a whole new group of Americans access to the financial system, hopefully so that they can grow their own freedom.
Congressman Emmer, glad you're on. One of the issues, of course, that's driving crypto right now is this fear that government spending is exceeding the ability of the economy to keep prices stable. In other words, it's going to cause a massive amount of inflation. The GOP has countered President Biden's proposal with its own $1 trillion infrastructure project package that would happen at a time when the economy seems to be roaring back. So shouldn't the Republicans have responded with $0 infrastructure proposal, even cuts in other spending? What happened to the Republican Party? Did you guys get rid of Reagan and replace him with Keynes?
I mean, you're talking to somebody who never voted for a spending bill under the last administration, because it is about the spending, it's about the debt. But look, to pick on one side or the other, this has been a Washington problem, not necessarily a partisan problem. There is no question, Lawrence, that this new administration, starting out with a $1.9 trillion COVID relief package, which was their version of a stimulus, quite frankly, less than 10% of it actually had anything to do with COVID. And now to have this $2.24 trillion bill that they proposed, that the president has proposed, the framework anyway, where I think it's 6% of it was actually for traditional infrastructure. Look, we got a problem in Washington, D.C. It's one that it's going to take both sides to sit down and recognize. There's no question that this unprecedented spending on the heels, well, during and now on the heels of this pandemic is a threat. With inflation, already we saw a spike in April, and we better start to get our heads around this thing. And yes, you're right. This area, crypto, stable coins, etc., the whole area is growing because people, frankly, this started in 2008 because people were losing confidence. So if we're going to restore confidence, we got to put some sanity back into the spending side of the equation in Washington.
So we're running out of time, but one quick question. My understanding is that you've been trying to get this bill through for a while now. Is there a holdup? What's the obstacle? Is there bipartisan support for this?
The bipartisan support is growing. There was opposition to begin with, again, because of the fear of the unknown. I mean, and by the way, government is so desperate on a regular basis because of what Lawrence talked about, the spending. Government has got to find new revenue streams wherever it can. In fact, the budget proposal that came out, interestingly, on a Friday afternoon before Memorial Weekend, which includes hiring all kinds of new IRS agents to try and chase down Americans. And I mean, we heard your guest right before I got on talking about how when it comes to crypto assets, they want to make sure you're not holding them offshore because they want to make sure that if there's a taxable event there, they can get it. This is something that we're going to have to be aware of. And as I push this bill and others, trying to bring some reasonable colleagues from both sides of the aisle that are willing to think out of the box and understand this is not going away. You can write all the op-eds you want in the Wall Street Journal and other places talking about how this isn't going to work. You can listen to the leaders of the big banks that we had in the Financial Services Committee last week talk about this is a bad bet, don't do it. Kind of funny, though, they're saying one thing, folks, but they're trying to figure out how they can be involved in this area as well. So there's a lot of promise in the future, but I think government has got to be a light touch, and we've got to allow the innovators to do what they do best, which is not only to continue to grow, but find new ways to give people access to the financial system.
Representative Emmer, good luck on this proposed legislation, and thank you very much for joining us this morning. I appreciate your time.
Thank you, guys. Have a great week.
You too. All right, that was Minnesota Congressman Tom Emmer. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, June 1st, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. We are seeing signs of the first regulatory clampdown on DeFi in Asia. Thailand Securities and Exchange Commission says digital token issuance over in the world of decentralized finance, or DeFi, must be licensed under local regulations. A new DeFi farming platform called Tuk Tuk Finance launched on Thai-based blockchain Bitconnect chain. And this had regulators worried because, as local media reports, the platform's native token, Tuk, soared to several hundred US and then it dumped, tanking down to just $1 in a matter of minutes. With rising cases of flash loan exploits happening around DeFi in recent days, it was just a matter of time before regulators got involved, and it looks like Thailand broke the ice. But the question still remains, how will authorities regulate a decentralized ecosystem? Watching this one closely. Over in India, an upbeat turn of events for investors as the nation's central bank gives banks the green light on crypto. The Reserve Bank of India's 2018 ban prohibiting banks from dealing with crypto was actually overturned last year by the nation's Supreme Court. But lately, a lot of customers were told that their accounts would be closed if they continued trading crypto. Well, now the RBI has clarified that that ban no longer exists. And hashtag India Wants Crypto took off like a rocket on social media.
Definitely a welcome move by Reserve Bank of India. It's like the best thing. It's just that they took way too long time to acknowledge this to the banks, and at least the banks can no more state that this particular notice is there, so they're not providing account. But now it only depends upon the legal and compliance team at the banks to allow the cryptocurrency exchanges and its customers to whom they want to provide the services.
Even with that green light, investors aren't breathing easy yet. There's more legislation on the table that could prohibit crypto trading in the nation. But according to the local industry, the government has shifted its stance from ban to regulation. All right, Bitcoin ending the day up almost 3%, nudging towards $37,000 at 4 p.m. local Hong Kong time at the end of the Asian trading day. And in the top 10 for cryptocurrencies, the best performers amid a swath of green across the board were Polkadot, up almost 10%, and Dogecoin, up almost 8.5%. And finally, Singapore's DBS Bank is to offer its first ever security token. The $11 million digital bond will be available via the bank's digital exchange platform. Now, the idea could prove attractive for the average investor, as tokenization allows the bond to be issued and traded in much smaller quantities than traditional bonds.
Not everybody wants to put so much money in a single product, right? So I actually think this is a great development. I think it will continue to showcase what blockchain can do for the broader investment industry, not just bonds, but also other investment types.
And for companies, use of platforms like the DBS exchange can actually lower costs when they are seeking to raise capital. All part of the bank's strategy to tap into the growing trend of asset tokenization, something that could provide a model for a lot more to follow. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently at $36,855. Bitcoin's trading pretty flat over the past 24 hours. And the CoinDesk Ether price ETX index right now, 2612. ETH is up slightly, about 3.2% over the past 24 hours. Also in the U.S. markets have just opened. Dow, S&P 500 are also slightly up. Joining us now to discuss the crypto markets is Ryan McCall, CEO at Zerocap, a digital asset investment and custody firm. Welcome, Ryan.
Thanks for having me.
Great having you. All right, so we see ETH at a 300 billion market cap, BTC at about $680 billion. There's a lot of excitement around ETH right now with the ex-head of China's digital yuan efforts saying that central bank digital currencies could operate on Ethereum. Do you see a flippening happening? What are you telling your clients if they're trying to get into the crypto market right now?
Yeah, look, there's definitely a lot of interest in Ethereum from our clients. Bitcoin, of course, is always the entry point for investors, and then to Ethereum and then other altcoins. But you can look at Ethereum almost like an ETF of decentralized finance projects. It's the protocol of choice for a lot of these platforms that are being released, and we're certainly seeing very strong interest in Ethereum over the short to medium term.
Morning, Ryan. What explains the current weakness in crypto? Is the narrative that institutions are piling in, is that narrative over?
Yeah, look, that's a good question. Certainly, the crypto industry likes that narrative, right? That institutional money is coming. Institutional money has come, and I think it has just been hype. The market was overhyped. It felt very reminiscent of 2017, 2018, and for the time being, perhaps. This pullback is going to be here for a while. Certainly, some of the more well-known figures in crypto and some of the statements that they've made, particularly around environmental concerns and acceptance of Bitcoin, have had an impact. But I think that's something that needed to be addressed, and now we're seeing some positive signs already of recovery off the back of that.
How closely do you expect the altcoin market to track Bitcoin? Do you think that they will be heavily correlated going forward, or do you expect them to kind of fork?
Yeah, I think there will be a divergence, certainly now. Bitcoin, as always, is the rising tide that lifts all boats. But what we're seeing at the moment is not so much that money is leaving crypto. It's more a repositioning phase. And I think in this current environment where there's very low yields, basically zero, investors are looking for yield wherever they can find it. And, we've been surprised actually at the level of sophistication and risk appetite from, high net worth individuals, family offices and institutions that we deal with that are interested in some of these more exotic, yield strategies like staking, yield farming, that sort of thing. So during, this time where we've had a bit of a pullback, some of these altcoins, we know some of them are going to go to zero, right? But certainly some of these DeFi projects that are really starting to show a real use case. I think we've got 65 billion at the moment locked up in DeFi. Those protocols and platforms are going to continue to grow. So
can you name names?
DeFi is definitely one to keep an eye on.
All right.
What's that, sorry?
Can you name names, specific projects, protocols, coins?
Yeah, definitely. Aave, Uniswap, SushiSwap. Uniswap, I think, has definitely got the largest volumes in DeFi land at the moment.
All right.
We'd certainly expect that to continue. SushiSwap is another one to keep your eye on.
Unfortunately, we've got to wrap, but thank you very much for your insights into the crypto markets this morning.
No problem. Thanks a lot.
All right, that was Zerocap CEO Ryan McCall. And that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.